Happy Monday, everybody, and happy Cinco de Mayo. If you have some festivities planned for later, I hope they go as expected, and you can enjoy some nice margaritas with some friends and family. If you saw my last video, I went over focusing on a payment goal when searching for a new home rather than focusing on a rate, because the rates are fluctuating so fast these days. People will be more successful if they just say, okay, here's what my payment goal is, and here's the range I can make work for my budget, rather than chasing a rate that's flying around like a chicken in a tornado. Okay, so payment focus versus rate focus. In today's video, I wanted to touch on something that was a little more seller helpful. Okay, and what I've seen recently is that there's been some price cuts. If a property's been sitting on the market for a little bit, at some point the seller or the listing agent will come to the conclusion, like, you know what, let's try to maybe increase our activity and reduce the price to catch some more eyeballs. In fact, and I looked it up, in April of this year, last month, nationally there was 18% of the homes that were listed had a price cut. Now, in compared to April's from previous years, that's the biggest cut that there has been in an April since 2016. So quite a few years. So what is the go-to normally? A price cut. So let's see how that helps a buyer or the seller. For our example, let's use a sales price of $585,000. We're going to figure a buyer is putting 5% down payment, and we're going to use a rate of 6.5%. Okay, so we're starting at a $585,000 sales price, a 5% down payment for the buyer, at a rate of 6.5%. In this scenario, now we're just going to talk about principal and interest. We're not going to talk about mortgage insurance, taxes, homeowners insurance. Just going to keep it down to the basics of principal and interest payment to kind of compare apples to apples. So at this scenario, $585 purchase price, 5% down payment, 6.5% rate, the principal and interest payment will be $3,512. Okay, so that's essentially our starting point. So again, house has been sitting for a little bit. Seller says, we got to get this going. I got to move. I got to get to my new job, or my house is getting built. It's almost done. What can we do? Many times the listing agent might suggest dropping the price. One I saw recently offered a price cut of $25,000 below the original listing price. So, do the math. Obviously, our new sales price is $560,000. All right. Same scenario, 5% down, 6.5%. The principal and interest payment on this is going to be $3,362. All right. Little math. You can see that saves a buyer $150 per month compared to the higher sales price. All right. Not bad. Buyers saving $150, but the seller just lost $25,000 in net proceeds. Not ideal, but it's better than not selling it at all. Okay. So there's the scenario with a price cut. What if we looked at comparing this to the benefits for offering a 2-1 buy down? If you're not familiar with what that means, a 2-1 buy down means that in the first 2 years, the seller will pay to buy the payment rate down for the buyer. Now remember, I said payment rate. The note rate is still the 6.5%. The payment rate gets bought down by the seller so that the buyer has a lower monthly payment for those first 2 years. Here's how that shakes out. So in this scenario, no price cut. So our price is still $585,000, still 5% down, still at 6.5%. So as we know, the P&I is $35.12 a month. Okay? What the buy down offers is in the first year, the payment rate, remember the payment rate is going to be 4.5%. That gives the buyer a principal and interest payment of $2,815. Okay? Second year comes around, the payment rate goes to 5.5%, which means the principal and interest payment goes to $3,155. Okay? Third year and beyond, if they still have the property, it goes to the final rate of 6.5% for the remainder of the loan. Still a 30-year fixed loan, so that this third year and beyond, you're at your 6.5%, which again, as we know, is $35.12 a month. All right, so let's see how this compares. Price cut, seller loses $25,000 in net proceeds. Buyer saves $150 a month compared to the higher sales price. With offering the buy down, the buyer, in those first 2 years, they save $12,648 in payments those first 2 years compared to if they were starting out at the 6.5% at the $585. Okay. Likewise, the cost to the seller to offer this is the same. $12,648. Okay? Because essentially what's happening is the seller is covering the difference between the lower payment rates and the actual note rate for the buyer for those first 2 years. So that's why these numbers are the same. Benefit to the buyer, pretty nice savings, $12,648. Benefit to seller, they're only coming out of pocket $12,648 instead of $25,000. So not exactly, but it almost saves them or nets them half more. So instead of giving away $25,000, they're only giving away $12,600 and still keeping the remaining money. Now you might say, well, those numbers are a little fudged because if the sales price was lower, the monthly payment's lower. So we should be comparing $33.62 to these payments to have a true benefit. Okay, if you want to compare it to this, so let's say that $33.62 is what a buyer could get for a payment at a lower sales price. If you compare this number to the savings there, the buyer still has a good savings. Saves $9,448 in the first 2 years compared to what they would be paying at the lower sales price. All right, you take $9,048 divided by 150, that would take them about 60 months to equal those savings with the lower payment here. In this area especially, people don't typically keep their loans that long. They may keep the house, But normally something comes up. Renovations, debt consolidation, rates get better. Who knows what? Most people don't keep their loans that long. So you can see offering a 2-1 buy down could be a very good option and very enticing for a buyer, while at the same time keeping more money in the seller's pocket. You know, maybe you offer both as an option A or option B. But what I wanted to get out there, just so you see the numbers, was a buy down could be a very viable option to not only help them sell or help the buyer save a substantial amount of money and help keep more money in the seller's pocket. So I hope that's beneficial. If you have any questions, of course, you can always reach out to me. You all know my information. Have a great day and look forward to my next video coming out. We'll keep on trying to provide information to help your job be easier, and your clients be more successful, whether they're selling or buying. Have a great day.